Tata Motors Q2 results பற்றி இந்த வீடியோவில் பார்க்கலாம். ஸோ டாட்டா மோட்டார்ஸ் கீழே வந்து 4 டிவிஷன் இருக்குது. ஒன்று வந்து டாட்டா கமர்ஷியல் வெஹிக்கிள்ஸ், இன்னொன்று வந்து டாட்டா பேசஞ்சர் வெஹிக்கிள்ஸ், இன்னொன்று ஜாகுவார் லேண்ட் ரோவர். The fourth one is vehicle financing, Tata Motors Finance. So this slide talks about the product and the other highlights. So during this quarter they have launched 5 CNG trucks. They have launched Yoda 2 Intra V20 biofuel and Intra V50, and they also have launched the electric vehicle version of Tiago, and they have ramped up Range Rover and Range Rover Sport, and the order book has grown to a new record of 205,000 units, and they have built partnership agreements with the suppliers, improving chip visibility. They have made some corporate announcement. One is to voluntarily delist Tata Motors Limited's ADS from New York Stock Exchange, as the objective with which they were originally listed are no longer relevant. So the holders will need to convert the American depository shares to the underlying ordinary shares by July 2023. So this is a snapshot of the consolidated revenue. So they have sold 335,000 units as global wholesales. So the revenue is 79.6 thousand crores, so which is an increase of 29.7% year on year. And the profit before tax is minus 1.8k crore, which is slightly slight improvement from the Q2 figure, which is minus 3.5k crore. The profit before loss is 1,800 crores, which is less than 3,500 crores loss in the previous year, same quarter. EBITDA percentage is 9.7% this quarter, and the previous year, the same quarter, it was 8.4%. So there is an increase of 130 basis point. And the EBIT percentage this quarter is 2.5%, and the previous year, same quarter, it was minus 1.5%. The free cash flow this year is 1,000 crores. Previous year, the same quarter, it was minus 3,200 crores. So the revenue in Q2 was 61.4k crores, and due to volume and mix, the revenue increased by 17,000 crores, and due to price increase, the revenue increased by 4,900 crores, and due to the foreign exchange translation, the revenue decreased by 4,500 crores, and others 600 crores. So the total revenue in this quarter is 79.6k crores, and the EBIT was minus 902 crores in the previous quarter. So JLR profitability was 2,690 crores this quarter, and then Tata CV 409 crores, Tata passenger vehicles 169 crores, others made a loss of 420 crores. So the EBIT for this quarter came to around 1,946 crores, so which is 2.4% of the revenue. The auto debt has slightly decreased from the previous quarter. It was 60.7k crores in the previous quarter. Now it is 59.9k crores. So coming to the results for the quarter ended 30 September 2022 for Jaguar Land Rover Automotive PLC. The retail sales was 88.1k units this quarter. The previous quarter it was 92.7k units. The revenue was the previous quarter 3,871 million pounds, and this quarter it is 5,260 million pounds. So the year on year, the increase was 36%. Profit before tax, the profit before loss was 173 million pounds this quarter, and the previous quarter it was a loss of 302 million pounds. EBITDA is 10.3% this year. Previous year, the same quarter, it was 7.3%. EBIT this quarter, it is 1%, and the previous year, same quarter, it was minus 4.7%. And the free cash flow is minus 15 million pounds this quarter. The previous year, the same quarter, it was minus 664 million pounds. So the highlights: retails up quarter on quarter by 12%, but it was down year on year by 5%. Wholesales was up 5% quarter on quarter. However, this was lower than the planned due to shortage in supply of specialized chips from a specific supplier. And the production ramp-ups have happened to over 2,000 per week for Range Rover and Range Rover Sport. Order book grows further to 2,05,000 units. With respect to profitability, EBIT margin increased to 1%, reflecting higher wholesales. Strong product mix. Loss before tax reduced to 173 million pounds, improvement of 350 million versus Q1. And the refocus exercise continues to drive value generation with 300 million pounds delivered in Q2. And the cash flow has been near break-even cash flow in the quarter with break-even volumes at 70k. Total cash is 3.7 billion pounds as on September 30, 2022. And the liquidity available is 5.2 billion, including the undrawn amount, which is 1.5 billion from July 2022. Coming to the Q2 wholesales, it is 75k, up 5% quarter on quarter and 18% year on year with improved model mix. So the Range Rover retails 40,300 units, and the previous year the same quarter it was 39.2k units. Defender 16.9k units, previous year same quarter 16.7k units. Discovery 13.6k units, same quarter previous year 17.5k units. Jaguar 17.3k units, same quarter last year 19.2k units. Total 88.1k units, and the same quarter last year it was 92.7k units. Coming to the wholesales, it was 37.54k units this quarter. Previous year the same quarter it was 29.8k units, 17.5k units. And Defender this quarter, previous year the same quarter it was 14.3k units. Discovery this year it is 8.4k units. The previous year same quarter it was 10.3k units. Jaguar this quarter it was 12k units. Previous year the same quarter it was 9.6k units. So totally 75.3k units this quarter. Previous year the same quarter it was 64k units. So in the UK region there is slight improvement vis-a-vis the previous year same quarter, 15k units this year and 14.3k units the previous year. North America 17.7k units this quarter, and previous year same quarter it was 21.3k units. Europe 17.7k units this quarter, and the previous year the same quarter it was 17.1k units. China 25.5k units this year, and the previous quarter it was the same. Overseas 12.2k units, and the previous year the same quarter it was 14.5k units. Wholesales, the UK region 11.9k units, which was less than the 12.6k units sold in the previous year same quarter. 22.5k units North America, previous year same quarter 17.5k units. Europe this quarter it was 15.7k units, and the previous year the same quarter it was 13.8k units. China this year it's 13.3k units, previous year same quarter it was 8.3k units. Overseas 11.9k units this year, and previous year the same quarter it was 11.7k units. With respect to the powertrain mix, 35% is ICE, 54% is MHEV, and 11% is BEV and PHEV. So 65% is almost electrified. So EBIT margin was minus 4.7% in Q2 financial year 22. So when the PBT was 302 million pounds. So volume and mix gave rise to a profit of 372 million pounds. Then due to pricing, another 141 million pounds. The contribution cost was 158 million pounds, and structural cost was 188 million pounds. FX and commodities minus 38 million pounds. So the profit before tax this quarter is minus 173 million pounds, which is 1%. EBIT margin was 1%. Profit before tax the previous quarter was minus 173 million pounds, and non-cash and other items 834 million pounds, cash tax 26 million pounds. So the cash profit after tax was 635 million pounds. Investment spending was 526 million pounds due to working capital changes, minus 124 million pounds. So the free cash flow was minus 15 million pounds, and the cash flow break even was around 660k units in financial year 19, which has reduced to 300k units for financial 23, and Q2 it was 280k units. Total investment in Q2 was 155 million towards capitalized engineering, 237 million pounds towards expense engineering. So the total engineering cost was 392 million pounds, and then capital investment was 134 million pounds. So the total investment was 526 million pounds. In response to the chip shortage, they are trying to optimize the production plans, ensuring that the chips are available and are allocated to the most profitable models and markets, and improving the future supply, engaging directly with the chip suppliers, entering into partnership agreements, and then focus to secure financial year 23 supply to enable improved volumes in H2 financial 23 and beyond. And the ramp up is actually continuing. So it was 1100 units per month in June 2022. So now it is 2400 units per month. The demand is continuing to increase. So basically the record order book 2 lakhs 5,000 units, and the inventory remains below the normal levels, both the JLR inventory and the retailer inventory. The sources of inflation during financial year 23 were commodity prices, semiconductors, energy, and other. So the inflation accounted for 430 million pounds increase in the cost in the first half of financial year 23, and the refocused savings was 550 million pounds. As and when the chip supply gradually improves, so the wholesales will actually become greater than 160k units. Now it is 147k units. So revenue will grow 10 billion units. Now it is 9.7 billion. EBIT margin will become positive. Now it's negative. Investment will be 1.2 billion. Now it's 1 billion. Free cash flow will be 750 million pounds. Now it is negative 784 million pounds. So coming to the Tata commercial vehicles, so the market share has been 43.2% in the first half of financial year 23. In financial year 22 it was 44.7%. The HEV and HMV segment, the market share is 50.7%. Previously it was 52.6%. MGV it's 47.2%. Previously it was 48.6%. LGV 39.3%. Previous year it was 41.4%. LPV plus MPV plus HPV it is 41.1%, and previous year it was 36.8%. And the total wholesales this quarter was 100k units. So previous year the same quarter it was 87.4k units. So year on year there has been an increase of 14.9%. And the retails 94.9k units this quarter, and the previous year the same quarter it was 77.3k units. So year on year there has been an increase of 22.8%. Diesel is actually 79% of the total vehicles sold. Petrol is 9%, and CNG plus EV is 12% in this half of the financial year 23. Q2 wholesale unit sales, and the wholesale figure is 103k units this quarter, and previous year the same quarter it was 89.7k units. So there has been an increase of 15%. The revenue is 16.4k crores this quarter. Previous year the same quarter it was 12.1k crores. So there has been an increase of 35% year on year. Profit before tax is 0.3k crore this quarter. Previous year the same quarter it was a loss of 100 crores. EBITDA 5% this quarter. Previous year the same quarter it was 3.2%. EBIT 2.3% this quarter. Previous year the same quarter it was minus 0.3%. PBT was minus 145 crores previous year the same quarter. So the profitability has been 429 crores out of volume and mix. Realization 638 crores. Variable cost was 493 crores. Fixed cost 193 crores. FX and others 56 crores. So the PBT this quarter is 292 crores. So the new business update, they have successfully completed ACE EV gearing up operations, and there is a healthy order pipeline of e-buses and ACE EV, and completed delivery of 100 e-buses to Delhi Transport Corporation. Received LOA for 3.6k buses from Delhi, Calcutta and Bangalore. Greater than 96% uptime delivered for the fleet of 500 e-buses managed under a pay-per-use model. Coming to the Tata passenger vehicles, wholesale has been 142k units this quarter. Previous year, the same quarter, it was 84.4k units. So there has been an increase of 69%. Retails this quarter, it is 133k units. Previous year, the same quarter, it was 85.2k units, which is a growth of year-on-year 57%. So domestic market share has been 14.1% this quarter. Previous year, it was 12.1%. Power mix 65% is petrol, 17% diesel, 8% is electric vehicle, and 10% is CNG. In the electric vehicles, the market share has increased from 87% previous year to 88%, and the number of units sold is 2808 in the first half of financial year 23, and financial year 22 it was 19,105 units. So dealerships has increased from 143 to 250. Cities 75 to 160. From a charging infra perspective, there are 3466 charging stations in this half of financial year 23. Previous year it was 2000. Wholesale units, it is 142k units this quarter. Previous year, the same quarter, it was 84.4k units. There has been an increase of 69%. Revenue 12.5k crores this quarter. Previous year, the same quarter, it was 7.3k crores. So year on year, there has been an increase of 71%. Profit before tax was minus 0.2k crores. The previous year, same quarter, and this quarter it is 0.17k crores. EBITDA is 5.4%. This quarter, previous year, the same quarter, it was 6.1%. EBIT is 0.4%, and previous year, same quarter, it was minus 1.6%. So 14.1% market share in the first half of financial year 23. PV and EV business has grown year to date by 84% and 371% year on year. So this quarterly figures, they are the highest ever quarterly offtakes. Number one SUV manufacturer in Q2 financial year 23. Posted highest ever sales in EV, 12k units in Q2, market share 87%. And there has been a strong booking response to Tiago EV. Demand is being sustained across the portfolio on the back of strong consumer appeal, strong trajectory of growth in EV to continue, and sustained focus initiatives for demand generation. Execute migration to BS5, BS6 phase 2 as per plan. Continue profitability improvement in line with glide path. So the free cash flow has been 698 crores, both CV and PV combined. So the investment spending has been 515 crores for the CV business, and for PV and EV business it was 679 crores. The CV market share, as far as Tata Motors Finance is concerned, it has a CV market share of 23% against 28% in the previous year same half. PBT has decreased to minus 77 crores this quarter. Previous year the same quarter it was 15. Assets under management is 46,296 crores this quarter. Previous year it was 43,039 crores. Gross not performing assets 8.5% this half, and 8.1% previous year the same half. net non-performing assets is 5.5% this year, and previous year it was 6.1%. So disposals were up by 62.6% year on year. The loss primarily was due to sharp slippages in the COVID-linked restructured book. The performance of normal assets on book remains healthy with 4.7% GNPA and 3.6% in NPA. Capital adequacy is at 22.6%. Tier 1 capital is at 13%. Debt to equity ratio at 5.5x. Liquidity is comfortable at 7.5k crores as on 30th September 2022. So TMF and TMFSL has been classified as middle layer NBFCs by RBI. There has been a process which is being undertaken to demerge the NBFC business of Tata Motors Finance into Tata Motors Finance Solution that will consolidate and simplify the corporate structure of Tata Motors Finance Group. Looking ahead, demand remains strong for now, will remain a key monitorable in the wake of global uncertainties, chip supply to improve further, volumes to ramp up steadily, cooling commodity prices to aid improvement in underlying margins, aim to deliver strong improvement in EBIT and free cash flows in H2. So Jaguar Land Rover priorities is to continue to secure chip supplies, tie-ups, continue to ramp up production, improve wholesales in Q2 to greater than 160k units, refocus savings to offset the cost inflation, deliver positive EBIT margin and positive free cash flow in H2 of financial year 22-23. And the Tata Motor priorities in CV, market-beating revenue growth through product innovation, sharp improvement in realizations and EBITDA margin, successfully deliver the new business models. PV continue to deliver market-beating growth, continue to improve the profitability and cash flows. In EV, increase the EV penetration with exciting new launches and capacity enhancements.